Hello folks, this is Stacy Fargo from Oak Partners with an educational economic update for April 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in March. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. The first quarter of 2019 is behind us and major domestic indices have posted a strong performance for the year so far. Between January and March, the S&P 500 gained 13.1%, the best first quarter since 1998. The Dow Industrials and Nasdaq Composite also posted double-digit increases during that time. While all three indices were up in March, their monthly gains were relatively small. The S&P 500 added 1.8%, the Dow hung on to a 0.1% gain, and the Nasdaq was up 2.6%. Questions about the strength of both global and domestic growth contributed to market performance during the month. Domestically, we had plenty to consider. The final reading of economic growth in 2018's fourth quarter lowered to 2.2%. Despite this downward revision, real gross domestic product was up 2.9% in 2018. However, the fourth quarter's slower pace reflected concerns that momentum from the 2017 corporate tax cuts may be starting to wane. We saw these worries play out as Treasury yields fell and the yield curve inverted. What this development means is that the yield on short-term Treasury bills and notes exceeded that of the 10-year Treasury bond. This type of inversion hadn't happened since 2007. Some investors believe that this occurrence could mean that an economic slowdown may be on the horizon. During its March meeting, the Federal Reserve confirmed that economic activity growth has slowed. The Fed chose not to raise rates and removed any rate increase projections for 2019. Chairman Jerome Powell also reinforced that both economic fundamentals and the labor market remain strong. On the international front, the European Central Bank cut its estimate for 2019 economic growth to 1.1% and announced a new stimulus program. These updates contributed to market uncertainty, especially at both Canada and Australia also appeared to have slowing economies. Wall Street reacted to this news by posting several days of losses. In addition, the ongoing question of what will happen with Brexit continued to play out in the background throughout this month. Although markets may be experiencing uncertainty regarding both global and domestic growth, all news wasn't negative in March. In the U.S., the latest data showed modest gains in personal income, new home sales, and consumer sentiment. Apparent progress in the trade talks with China also led U.S. markets to end the month on a high note. As you can see, a lot of moving parts and key perspectives are affecting investors right now. We will continue to monitor these developments in April and try to determine what may lie ahead for economic growth both in the U.S. and abroad. That's it for this month's Educational Economic Update. Once again, this is with signing off for the month of April 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 219-795-1000. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.